Gents, how are we? We are live Thursday, the 30th of January, 7 o'clock on the dot, maybe 10 seconds over, but hey ho, we don't mind 10 seconds. So I'm just going to fill a little bit of humour while we wait for everyone that's registered to join the group before we kick off with some headline news. So, got a little bit of echoage going on there. I don't know where that's come from, but nonetheless, we're going to crack on with the show. So got quite a lot to cover here. It's the first one of the year, and obviously we've nearly got a full month of the year already, which in its own right is quite scary. And as you can see, we've got two of us that are able to use backgrounds, two of us that are not, and that does have a bit of an impact on the color of your hair and how much you have, apparently, Tom. But
it's taken all mine away.
Yeah, this is not a live webinar masterclass, so we're going to move past that straight away and get into the headline news. So thanks to the people that are joining us. Hopefully you can hear us loud and clear. What would be great for us to be aware that you can hear us loud and clear is if you could just, in the comments, drop us a question. This is a live Q&A, so at any point you can ask us a question, but give us a thumbs up or just give us a loud and clear just so that we know everyone is picking it up. There we go. Cindy already. She's quick on the draw. We can hear you. So we are good to go. So some of the headline news is that you will see on the ticker below. Zoopla report just came out today. So this is hot press. And they have highlighted that in the first 29 days of January, their report was from yesterday, issued today, that sales is up 13%, and they classify sales as demand. So we've got a 13% better start to 25 in comparison to 24, which is interesting. And we'll talk to the guys on that in a second. Thank you, Marina. Clear. Bosh. We love that. And get your questions in as well. That would be super. Matt as well, loud and clear. Looks like everyone's there and joining, which is good to see. There's an interesting article actually that was issued as well today. 500,000 pensioners are still paying off their mortgage in the UK. And that maybe is a topic that we're going to catch up on at some point, Tom, because of the difference of, I guess, the length of mortgages now becoming longer and longer. So we're going to talk about that a little bit in detail as well. If you were on the market in 2024, Clint, this is more your world. If we were on the market in 2024, 63% of properties listed found a buyer. So only 6 out of 10 people that went to the market expecting to sell actually did find buyers last year, which, as a horrifying stat as it is actually higher than quite a few of the years over the last 20 odd years that we've been doing it. So that's something to talk about in a second as well. The market's nearly returned in terms of completions, and last year, by the time land registry figures come through, we'll have seen 1.1 million properties completed. Normally, there's about 1.2, so it's about 100k less, and that's just that stamp duty holiday that's kind of falled out. Another interesting statistic, in 2024, 41.2% of all properties that went to the market had a price reduction. Now, here's the caveat to that. This statistic is a little bit of a bonkers one for people looking to put their property on the market this year. On average, over the last 12 months, properties without a price reduction sell 14% faster than ones with a price reduction. So if you get your price right, you've got a much better chance of selling. And Clint is nodding away like one of those little dogs on the back of a car.
Yeah.
Yes, I agree with that. Love to see that. On average, a property takes 119 days to go from sold to completed, and prior to that, 109 days to go from for sale to sold subject to contract. I must say that is not with Avocado agents. It's much stronger than that, but that is a national statistic. So that's your headline news. For the people that have joined us on the call, welcome. This is a live Q&A. So if you are a buyer, seller, landlord, looking to get a mortgage, interested to know more about surveys, got a question for the estate agent in the house, Clint, please do drop us a question into the comments and we will jump straight to those at the earliest time that we can and get those answered live to the panel. As mentioned, I'm joined by Tom. Tom, give us a wave. Tom is our resident mortgage broker from Mortgage Tribe. He's going to give us an update, first of all, on the mortgage stuff. We've then got Luke from Survey Network, who is going to give everyone some helpful tips around surveys, what you do and don't need. And then Clint, our resident estate agent, who is going to give us an update on the property market in a little bit more detail as well. So first, Tom, 60, 90 seconds. Talk to us about mortgages. What is going on in the mortgage world?
What is going on? I think probably the main thing I'd say is it's definitely very stable at the moment, which I think is a breath of fresh air, considering for the last sort of 2 years when we've had a lot of sort of turmoil, it feels like. So rates they're not changing a great deal. We get, lender updates day to day, but it might say, we're increasing our rates tomorrow or we're decreasing our rates tomorrow, but it's usually by sort of 0.1, 0.2% really. So it's probably the most sort of calm time that I've kind of experienced for quite a few years now, which is quite nice. Biggest sort of changes. We had a really good first-time buyer workshop last night that me and Vez hosted, so thank you everyone who came to that. And we were talking a lot about two lenders specifically, which are Nationwide and Halifax. They've introduced what Nationwide called a helping hand scheme and Halifax called an income boost scheme, which basically means for first-time buyers, they'll lend between 5.5 and 6 times their combined income, which is considerably better than 4.5 times. There's no cap on it either in terms of how high your income is, which is really good. So we're really helping quite a lot of first-time buyers who are high earners, because the multiplication of sort of 6 or 5.5 helps them out a lot. So that's probably the biggest thing that's coming in the last 12 months, which is really helping people get on the ladder. And we're enjoying working with those people.
Do you think, Tom, that they brought those in with the stamp duty threshold due to change in a couple of months' time? Do you think they're kind of trying to keep the first-time buyer market moving with those kind of teaser mortgages, with the fact that it's going to be more expensive for them with extra tax to pay in April?
Possibly. I just think they've come to a bit of common sense and realised it's really, really hard for first-time buyers to get on the market sometimes. And it's not necessarily the deposit; it can just be the income multiplication, especially in the south with how house prices are. You just need a slightly bigger mortgage to get on the market, and people can demonstrate how much rent they might pay and that sort of thing. For example, Skipton Building Societies now have what's called a track record mortgage, which basically, if you can demonstrate what you've been renting for the last sort of few years, that kind of thing, they'll take that into consideration for your mortgage going forward, which again is very sort of just more common sense and forward thinking from lenders, which we're finding very refreshing. So and I kind of like the fact they're doing it just for first time buyers. It's helping them get on the ladder rather than just anyone will give 6 times your income, because then you do get into trouble. But so it's helping people a lot and just making them feel a little bit better. It's just a little bit easier now to get on the ladder, which is good.
Yeah, nice. We've got a question here that's come in as well, Tom. What is the average mortgage rate for someone with a 15% deposit? You said stable. I guess stable means rates are stable, right? So
yeah.
I know this is not direct advice, don't hold into it, but what is the kind of sort of average 15% deposit looking like at the moment?
I literally did a 15% application about 2 hours ago, so I know this answer. For a 2-year fixed rate, you're probably looking at about 4.6%. And a 5-year fixed rate is lower. You're probably looking at around the lowest is 4.36 on the 5-year fixed rate right now. Lenders are offering better rates on a 5-year fixed rate, which is not normal in my experience. Until sort of 2022, you'd always pay more to have a 5-year fixed rate because you'd be paying for longer term stability. Whereas now it's very much dictated by swap rates, and the swap rates on 5-year money is lower than 2 years. So that's how the lenders do their pricing really. And they do offer higher mortgages if you fix for a longer period of time. So again, it's quite a new thing, but when we do an affordability calculation, they'll give us 2 answers. One, if you fix for 2 years, and one if you fix for 5 years, and the 5-year is normally higher.
Nice. Okay. Good to know. Any questions from yourself, Clint or Luke, for Tom around mortgages? Anything that you guys want to know? Caught them off guard there. They didn't expect me.
Yeah.
I've got one. If you'd be happy for me to go, Clint.
Yeah. Good.
How much more? Because I think people often don't understand how much more challenging is from a broker's perspective, how much more challenging or time involved is a self-employed person or somebody with not one source of income in comparison to somebody who has an employed role. It take a lot more of your time, of the bank's time, or underwriters. I mean, I don't have much exposure to it.
Yeah, the short answer is it will take more time because if you're self-employed and you've got a good accountant, it's where they really earn their money. Because quite often I'll say to a client who's self-employed, these are the documents that I need, which is significantly more than if you're employed. I probably just need your last 3 pay slips. If you're self-employed, I need your last 2 years tax calculations, tax year overviews. They might ask for the business bank statements a lot. What I'll quite often say is, if you haven't got that information, don't worry. Give me your accountant's details. If you're okay with it, I'll speak to them and they can give me everything that they need. So it's a longer process in that instance, but we see that a lot of accountants are more helpful than others. But they really do help their clients when they need, when they do need a mortgage. So it's a little bit more time on our case, but it's a lot more time for the client and their accountant if you're self-employed, basically.
So,
Tom, my question would be something that someone asked me actually on a viewing the other day. She said to me, looking at what's happening in the market, and there's been a massive focus on these interest rates probably for the last year, where people have been going, when are they coming down? How far down will they go? And I suppose there's some people that are kind of holding back and going, what's going to happen next? So if being sensible, say, for example, I had a 10 or 15% deposit, I'm ready to buy. Do I go for the longer fixed rate? Do I go for a shorter fixed rate in the hope that maybe mortgages will drop? What would your general advice be surrounding that at the moment? Because it's a bit of a gamble, I feel.
Yeah, I think you're right, Clint. It's a bit of a gamble, but unfortunately, quite often the fixed rate element is sometimes dictated by the lender. Because if a first-time buyer comes to me and they can only get the mortgage they require on a 5-year fixed rate product because the lender will lend them that amount, then our hands are kind of tied in terms of what we can lend them. The first question I always ask someone is, is this a sort of medium to long term purchase, or do you think in 2 or 3 years time you're going to need to move again because you're having more children or want to get into a different catchment area? So it's very much sort of individual circumstances. But for anyone to answer, I guess, the first part of your question, Clint, people sort of worrying about, are rates going to come down and that kind of thing. If you look over the course of time, I'm not just talking about the last 10 years, I'm talking about the last sort of 50 years, even more. The base rate, the mean average has been about 5%. So this is almost normal in the grand scheme of things. Now, obviously, we all know it's not normal because house value is much higher. Say 20 years ago or 30 years ago, your house prices were significantly lower and your mortgage might have been 2 times your income, and now it's 5 times your income. So relatively speaking, it's not the same. But if you look over the period of time, we're actually back to normal. If you think about, in 2020, I did my lowest ever fixed rate, which is 0.89%. That's not normal. That is abnormal.
I'll take it.
Yeah.
I'll fix that for 25 years, please.
Yeah. I've got a very good friend of mine who, I think it must have been like June 2022. He did a 10-year fixed at 1.8%. And nice. I just think, I wish I'd done the same, but
we had a question actually, Tom, which kind of is answered by what you just said. But do you think mortgage rates will go up or down over the next 6 months? So hard to tell, but things are stable at the moment. And even as
in 6 months' time, I just think there'll be give or take a percent, 0.1 or 2%. I think it'll be exactly the same. That's my personal opinion. And
we've got a couple of extra people that have joined since we kicked off. So just a reminder to everyone, it's a live Q&A. Feel free to ask us a question. We've got Tom, the mortgage advisor. We've got Luke from Survey Network to talk all things surveys. Clint, our resident estate agent from Avocado Property as well, with 20 years experience. So if you've got any questions about property, moving markets, surveys, anything like that, please do drop them in. And all your headline news that I highlighted at the beginning is across the ticker at the bottom as well. So, Luke, just moving on to you, in terms of surveys for people that are looking to upsize, first-time buyers, etc., in a kind of summary, how would you explain, I guess, why a survey is important and how to understand which type you should select?
Yeah, it's a good 2-part question. I mean, ultimately, understanding probably why you need a survey, or if the property needs a survey, is the most important thing initially, which comes from speaking to somebody who works in the industry, not probably speaking to your auntie, your cousin, because everyone have a different opinion, including the solicitor. Just speak to somebody who can give you sound advice as to whether you need one, and if it poses a benefit and it's going to leave you more informed or it's not. You'd like to think that all surveying firms would have the integrity to inform you if the results of what they're going to produce for you don't give you anything more than the management pack and the information you already have to hand. So I'd say initially understanding if you need a survey is super important. There's definitely been an uptick in surveys being conducted. Typically speaking, it's about 10% of transactions in the UK that take surveys, which is obviously very, very low. So 1 in 10. Obviously, there's probably a lot of leasehold properties where people don't think that there's necessarily a valid benefit to conduct one, which, again, that's very individual to the property, but there are instances where that might be the case. Last year, although it's only risen to 15%, it is a 50% increase on the volume of transactions that had surveys year on year. And I think people are just being slightly more cautious about potential costs and potential implications of not understanding the most expensive thing they're ever going to buy, and attached to the most expensive thing you're ever going to buy, a bit like a car. If your engine goes in your car, it's quite expensive. You can imagine if your roof goes on your house, it's that, but times by 5. So I think there's more of an appetite from both buyers to understand what they're buying and make sure that they're not left with any risk that they're unaware of. But also we're seeing a lot more sellers who are preparing their homes for the market and to market their homes, and asking us to do surveys to highlight to them, is there anything in their property that they aren't aware of that would be beneficial to either disclose to a purchaser so that there's no awkwardness during the transaction, or alternatively they get fixed before they go to the market so that they know that their home's in the best possible condition. I mean, no different to Clint. I'm sure Clint explains to people how to present their home in the best light from a aesthetic and marketing perspective. We're doing exactly the same, but from a sort of a technical perspective, and saying, right, make sure that your home is in tip-top shape. It's had its MOT, as it were, and it's ready to go, and it's as described. When you get onto the second part of the question, which survey to have,
just on that, Luke, I think it's important to put the context to that as well, because that normally in the UK, about a third of properties find a buyer and then the buyer is lost or the seller pulls out. Last year, it was 24% of properties that had a sale agreed. We call it fell out of bed. You know, it parted ways in one way or another. But if you can find, a lot of that problem often comes in the survey, where there's a surprise that you didn't see on the viewing because you're not a surveyor. And if you're in a property that is, 35, 40 years old plus, then to actually get that information up front as the seller stops the surprise and the heartache later on. So it's a really clever way of kind of doing it. And I also think it's important to highlight, as you said, more people are doing it now. And it kind of raises the question, well, why now are more people doing it? But in 2000, the average UK house price was 81,600, so 25 years ago. So although it's still a lot of money, it's very different to the average house price in the UK now, which is just shy of 300k. It's a different world. It's worth a couple of £100 now, whereas maybe before people were a little bit more slapdash with it, maybe. So
I think also it's like, as Tom said, the lenders are trying to be more helpful with creating ways of allowing people that either have a good deposit or can prove that they've paid good rental sums to allow them to access the market. But these people are making an informed financial decision and haven't got lots of money sloshing about in the background should there be an issue. And I think that everybody's just going into transactions a little bit more considered in comparison to like a stamp duty rush where everyone's just piling in and just buying it because they want an office in the garden.
Mm-hmm.
Can I just want to say just quickly on that, because I just want to say from an agent's point of view, selling someone's home. I recently put a house on the market and sold a house. Well, had an offer accepted for a lady that was selling the property near me, a place called Walter Orton, and it had previously been on with another agent, and it had fallen through 3 times. So I had 3 cancelled sales. So obviously, my first question was, what's happened? Is that on your side? Is that on the buyer's side? Has the agent missed something? And she said, well, all 3 times were because there are a lot of problems with the house. Now, straight away, I was thinking survey, which I would have got you guys in. So I said, look, let's get a survey done on it. She said, I've got a survey. It's a full home buyer survey. And I went, have you got that like physically? And she went, yeah, I've got it physically. I went, okay, cool. I spent 2 weeks marketing the house, no viewings at all for the 2 weeks. And every single person I discussed the house with, I sent them a copy, with the owner's permission, sent them a copy of the survey. Out of I think I had 28 viewings book in, there were 14 people. So half of them didn't bother viewing the house. There were 14 people that ended up turning up at the property. Out of those 14 people, I had 5 offers, and she sold for £9,000 more than the 3 offers that had fallen through, with people knowing about the problems up front. And it's like, that's what we should be doing.
Yeah, I completely agree. It would be great for the industry. It would just, everybody's going into it with their eyes open. Everyone's essentially shaking hands at the start, knowing that everyone's playing with a straight bat. And then legals can just progress. There's no, what about this? What about that? The information's
my buyers have already started putting together their team to come in and sort the problems out, because they know the exact problems. They know what they're dealing with. They haven't renegotiated the price because they were happy paying that price, knowing everything is transparent. It's a very, very smooth transaction. That is going through. They're moving in February. So, just a bit of advice out there. If you own a home and it's, a 1930s home, and you maybe haven't done a lot of work to it while you've been there, for the sake of a few £100, it's better than finding a buyer and either falling through altogether, or worse still, they try and renegotiate the price with you because something's popped up on their survey that they've had done 4 or 5 weeks down the line. If you're transparent from the start and you can say, these are the issues, that's the price, it's much easier for everyone.
Confidence dictates the market. Tom, you will see that with mortgages as well, and base rate changes and things like that. And there's a point that we'll come on to in a second on that. I just quickly, while Luke's in the flow, Megan's asked a question, how long does it usually take? Which is a great way of explaining the different types of surveys as well, Luke. So if we just answer Megan's question, I've got another question here from someone else in a second about shared ownership as well, which I'll go to you with, Tom, I think. Luke, timescales.
How long does the survey take? Typically it's obviously dictated, one, by the size of the property, just physically how long it takes you to inspect the whole property, which size is a dictating factor, and then the level of survey, which essentially really is the level of detail that the surveyor is going into on that inspection. And you've got a level 1 survey, which is a condition report, which is quite high level information, typically suitable on relatively new properties, less than 10 years old, in good condition, no changes, amendments to them since new. That probably takes between an hour and 2 hours on the average home. Might be slightly shorter on a 1-bedroom flat and longer on a 4-bedroom detached, but as a rule of thumb, 1 to 2 hours. A level 2 survey, which is generally speaking probably the majority of transactions will have a level 2 survey. What estate agents would refer to, typically speaking, as a home buyers. which whenever I say level 2, someone says home buyers, it always causes a bit of confusion between everybody, especially when the document comes across and it says level 2. But that is, generally speaking, majority of properties in a fair condition, traditional type of construction, normal brick built, nothing out of the ordinary like a timber frame house, built in the last 60, 70 years, which obviously a lot of the UK market, especially in the south, is. They are probably 2 to 3 hours, 4 hours plus on larger properties. And then a level 3 survey, which used to be termed a full structural. They are the most timely and the most involved and the most descriptive type of surveys. They are likely to be 3 to 4 hours at least on an average house. And in reality, on slightly larger homes, you'll be there for the majority of the day to inspect it. Going into real detail around, they're typically conducted on more dilapidated, older listed properties. So going into very specific construction detail, construction methods and materials, to really give sort of maintenance and cost planning to the person buying it, to understand it might cost you X amount today, but what's it likely to cost you over the next 5 to 10 years in ongoing maintenance, because this property is an older property and will require that ongoing maintenance. So it's far more involved for survey time, and also writing up the report to give that sort of 1 to 5 year cost advice to help the buyer understand, not today, but what the total cost will be for them.
No, it's good to know. Yeah, it's helpful. It's good to explain them as well. We've got Ian that joined a little bit late. We're a dying breed, us Ians. So yeah, it's always good to see a fellow Ian in the house. Just a reminder, if you've got a question, drop it in the comments, and maybe not about our names, but anything property related, we're happy to answer, Ian. Tom, question on this one before we go to Clint. Someone's just posted in here about their concern on a shared ownership. They've got over 50% deposit, which I think they mean they own over 50% of the property, or maybe they have a 50% cash deposit and they're looking at a shared ownership. Actually, what would your advice be on this? Get a mortgage or buy the house outright? Now, my understanding, Tom, is you can't buy a shared ownership outright from purchase.
Yeah.
If she owned the shared ownership, or if they owned the shared ownership,
yeah, there's
to buy 100% of it.
Yeah, there's two scenarios there. I guess if you, for example, do own 50% of the shares and you're already in the property, you can what's called staircase. So you can effectively purchase the other 50% of the property. There's a bit of a legal process to go through, and you need to speak to the housing association to agree a value of the full market price of the property. From a yes or no point of view, I would say absolutely. If that's possible for you, go for it, because you're no longer going to be paying rent for 50% of it. You're going to be paying a full mortgage, and you own the whole property, and any equity is yours. If you have 50% deposit available for a property, I don't know, for argument's sake, is 300,000, 400,000 pounds, then that's just going to come down to your income at the end of the day, because you'll get the best interest rates with a 50% deposit by far. Lenders will be keen to lend to you because it's a very sure bet for them, for want of a better phrase. It would just be down to what's your income and what your outgoings. So it'd be worth having a chat with a mortgage broker, because it's just a fact that you feel you've got a large deposit, but you just can't get to where you think you should be. Can we tweak some of your outgoings? And if I said to you, if you can get rid of that credit card or that car loan, and it increases it to a level that you need to be at, then that's a conversation worth having. So yeah, it's two obviously different scenarios there, but definitely if you own 50% shares in the shared ownership and your financial position has improved since you first moved in, which we see a lot of, then definitely look at staircasing, because it can be worthwhile doing, just because you're going to be paying full mortgage and not half rent, and you reap the benefits of that.
Yeah, nice. Yeah, I think if you've got detailed questions that you want to ask, it's best to have a chat with Tom and talk about either the purchasing out the other 50% or buying a shared ownership or not.
Yeah, happy to help whoever sent that question in. Yeah,
yeah, absolutely. Get in contact. Right, I do have another question on surveys, but I'm conscious that Clint's been sat there for half an hour, and I want to hear.
He's raring to go.
I want Clint to answer this survey question. That's what I want to say.
He probably can answer this question. Actually, it's from Ian. Is a 1, 2, or 3 survey transferable if a buyer withdraws for any reason?
Yes, but obviously they own that, don't they? They own the survey. So I had that recently, actually, not on the one I spoke about, because actually the owner had got hold of it. I think that was through the previous agent. So strictly speaking, should she have had a copy without paying for it off the buyer? I don't know. But I had another case over in Kingshurst, which is just next to Solihull, and the buyer had a survey done. He then wanted to renegotiate the price, but he didn't want us to have the survey, which put me in a really difficult position of saying to the owner, there's a few problems on the house, so he wants compensating the price. And the owner was like, yeah, that's fine, because it's my mum's house and she's now gone into a home and, we could do with it going through. Can we see the evidence? And I was saying to him, can we see the evidence? And he was going, it's going to cost you. And I was going, yeah, but I'm trying to get money for the house for you. And so his argument was, well, look, if I end up pulling out because of these problems, you end up with £1,000 worth of survey for nothing. And so there was a bit of a weird one. But as I say, other cases, the buyer's been like, well, I can't do anything with it. I'm not buying the house anymore, so have it. Is that about right?
Luke's desperate to say something.
Not that I'm all wrong.
Right. I wasn't going to say you're all wrong. It's fine. You're unregulated anyway, so you're fine. It's transferable, definitely. It all depends on time. The survey will obviously be dated and be from that original inspection date. So if it's 3, 4, 5, 6 months down the line, it's probably worth getting another one just to make sure nothing's sort of drastically changed. But they are transferable. There are varying sort of conditions that will go around that or things you need to be aware of. But in essence, what Clint said is right. Ultimately, the person who buys the survey owns it. And if they choose to provide that to the agent, to a new buyer, to the homeowner, it's at their liberty to do so.
I'd be selling it on with £100 top up on it if I was the buyer. Anyway, great questions. Loving these guys. Thanks for throwing them in. Clint, talk to us. I mean, there's a question that we had a pre-question here. How long does it take to sell a property from start to finish at the moment? We kind of answered that with the headline news, but it's a great way of kind of opening your thought process. What's the market doing start of the year? What's your forecast? What's your outlook? And what do you think is going to happen?
Yeah. So obviously you've touched on the headlines, which are all positive headlines. So buyer demand is up, sales agreed are up, new supply is up. Although when you look at that, the buyer demand is outstripping the new supply. So again, that pushes prices up the most. But it's a strange market at the moment because number one, it's a resilient market, because if you look at what's happening in the world at the moment, we should really see a bit of a decline in the housing market. You've got wars that are going on. You've got economic difficulties in the UK. You've got questions over the new government that's come in. You've got stamp duty about to kick back in March. And so, I wouldn't blame anyone for looking at the market and being quite negative about it. I'm massively into my data, as I think we all are at Avocado. We read the data very well. So the data then tells a different story, and the data is the data. That is what's actually happening in the market. So we have got a resilient market, but I'm finding that just going back to the figure or the stat on 42% of people having to reduce their price in order then to agree a sale, that's a massive sign that we are still and have for a long time been in a very price sensitive market. And if you know that data and you use that data to your advantage, you actually end up getting more money for your house. I'm selling a first-time buyer's property, not this weekend, the next weekend. And we've already got 8 people booked in for that. I would expect that number is going to probably be in the region of 25 to 30. But all we did in that situation was we looked at all the properties in the area that could potentially compete with this one that we've put on the market, and we priced it accordingly. And in this case, we've asked for offers over, so we're encouraging as many people as we can through the door, and then really it's up to the buyers what they want to offer on it. If I had priced that property even 5% higher, I would have probably had 2 or 3 viewings. And I know that because I'm watching the market and I'm watching other houses in the area. And I've spoken to one of the other houses in the area who aren't getting any viewings, and they're about 8% higher in price than this property. So when we mentioned price earlier on, that is the market we're in. And you almost feel a bit counterintuitive going, well, if I go on for a lower price, I actually stand the best possible chance of getting a slightly higher price. You kind of think, oh, should I try that higher price? But as the figures say, 42% of people did try that higher price. And then they spent 3 months at that higher price, or 4 months or 5 months. And then they came down to a reasonable price. And then you look at an average sale of 120 days at that average price. That's a national stat rather than an Avocado stat. But if you look at that, then you sit on the market for another 3 months at the price it should sell at. And then you've got 100 odd days then to get it through legals. So if you don't get your price right in this market, this is sort of the biggest thing in this market. If you don't get your price right in this market, it could mean the difference of another 4 or 5 months on top of the 4 or 5 months that you've struggled to sell. So it could really throw everything out of kilter for you.
Yeah, I think when you're seeing a market where we're seeing on a 12-month rolling prices going up 6% or more, there is a market there to say that a seller can potentially chance it a little bit higher, because they know that roughly in 3 months' time, the market will have gone up 1.5%, and it may have caught up with their price. When you're in a pricing market, which is, 1.5 to 2, which it sits at the moment, you just have to be really, really honest with your pricing, because you're kind of tipping it towards maybe a buyer's market if you get it wrong. And as Cindy puts in this question here, given that 6 out of 10 sellers in 24 successfully moved, that leaves 40% who didn't. What is the big reason in the market that 40% of people that come to the market with their full intention of what price am I going to get for my home, but no way are they thinking they're not going to be able to find a buyer? Everyone comes to the market thinking 100% they will sell. It's just at what price? 40% don't at all. So why do you think that's happening? I'll ask the whole room on this, actually. So Clint, starting with you as the agent, what's your thoughts on that?
I think there's 2 issues here. The one is the one that we've just spoken about. People are very, very tempted, and I can see why they're tempted. And nothing against people doing this, because they're not experienced they're not estate agents, so they don't deal with transactions every single day. And you kind of think to yourself, well, if my house is worth 500, if I could get 525, then I could maybe do X, Y, and Z, or I could afford the next property. I could afford a bit more money. So it's very, very tempting. And it's even more tempting when you get agents like myself going, yeah, buyer demand is up and sales agreed are up and new supply is up. You kind of go, cool, let's go for the higher price. So that's your 6 out of 10. If you think about that other 40% that go into a category of struggling houses, I know that 40% we're saying eventually sold, but you have then got a 40% of people that are not selling until they reduce their price, and quite a lot of those don't reduce their price. They end up getting a bit despondent and go, I might as well come off the market, wait till next year, or rethink the whole move. The second is a problem that's been around in estate agency for a long time, and I talk about this quite a lot. If you look at the bigger corporate estate agents, when you look at them from a business perspective, so and that's how they see themselves, just as a big sort of business. If a big agent has got 100 houses on the market, if they sell 30 of those houses in a month, they are profitable. They will go out for drinks at the end of the month with the team, and they'll pop the champagne and they'll be celebrating that they've sold their 30 houses, that gets them, and they've got 30 happy clients, and that's the part they'll celebrate. But the other 70 houses are still stuck on the market, and they'll have to work out then how do they sell those houses. But by the next month, they would have put a load more houses on the market. So they'll have the same problem next month. So I do think that, and it's getting better and better, don't get me wrong, there's a lot more forward-thinking agents opening up. There's a lot of self-employed agents that are very good. So I think that problem is getting less and less now. But as an industry, I think that's been a problem for a long time. So do I blame the agents? Do I blame the industry? Yeah, 100%. Because if you took one house and you gave it to one agent, so Ian, if I gave you one house to sell today, and that's all you had to concentrate for for the whole of the next month, there's probably 25 things that you could do straight away to get that one property sold. But if I gave you 100 properties to sell, you're just going to hope. You're just going to hope that a load of those sell. And if the ones that don't sell end up coming off the market, well, let's crack on with next month. So yeah. I'll blame the industry as well.
Yeah, volume games. Yeah, nothing does well in a volume world. Luke, what about yourself? What's your thoughts? Reasons why in the market. I mean, you see it through a couple of different perspectives here. So thoughts?
I think to echo what Clint said, I think you've obviously got the people that get despondent, potentially have been given the wrong advice, set their expectation based on a number or a dream that really is not real, and therefore it's very difficult to change your expectations once they've been set and lower them. So I think a lot of people have that issue of despondency when they realise that it's not quite as described. And then the second, I think, is property industry wide, and it comes down to communication between everybody that works in that ecosystem of property, be it the agent, the broker, the bank, the surveyor, the lawyer's assistant, the seller, the other agent that's further up the chain or lower down the chain. The transaction is only as good as the worst person in it. And unfortunately, if you've got anything that's above first time buyer, buying vacant, someone buying new, as soon as you start to build a chain, you've then got 10, 15, 20, 30 people involved on advisors to clients and the clients themselves. And it only takes one person to feel like they don't know what's going on, have a bad weekend, and send an email saying, I'm not buying this anymore. And it blows the whole thing apart. And then it shatters everybody's dreams. And then everybody, to a degree, some more than others, become despondent. And then a lot of those people just come off the market and start again. And I think it's a shame that communication is the biggest complaint in the property industry. And it needs continual work, because chains fall apart every day based on the communication of the worst person in the transaction. And it's so frustrating for the people that put the house on the market or make an offer because they want to move home. And we don't do them justice as an industry, I don't think.
Mm-hmm. Yeah. Right. Well, shall we be a bit more positive now, Tom?
Well, I'll be brief, but it kind of echoes exactly what Clint and Luke have said. And I can give twice first-hand kind of evidence of this, because me and my partner are moving at the moment, and we got let down by the people who were buying our property. Their solicitor was really, really, really poor, and the letters that would come through, the amount of spelling mistakes, they just didn't make sense. And I don't blame the person who was buying our property for pulling out. I'm personally probably about £20,000 worse off as a result of this in terms of house price and that sort of thing, but is what it is. But like Luke said, that was due to a really bad solicitor. And if I'd been given the advice that solicitor gave me, I probably wouldn't have moved either. So I don't blame the person, the buyer, but the communication was poor. I just always say to my clients, get a good solicitor, don't go cheap, get someone who's recommended. and someone who'll pick up the phone, who'll answer an email. And I say it all the time, the amount of people that thank me for getting back to them, I just find so frightening. It's like, I'll tell them I haven't got any good news for you, I haven't got any news for you, but just to let you know I haven't forgotten about you. And that means so much to someone. And it's like, it kind of shouldn't mean that much. Some of it does. And also having personally sold a property through Avocado recently, Will and Mike in Crowthorne, who have been just unbelievable. This is not an Avocado shout out, I'm just being honest. Dealing with a self-employed estate agent rather than a big corporate one. I have one point of contact. I will send a voice note or WhatsApp to Will or Mike. They'll get back to me within a couple of hours. I'm dealing with 2 people tops. That means so much. And I think if you're having to ring up an office that's got sort of 10 people in, it's just the communication just can't be the same level. And you've got people who, I'm a bit biased because I've been self-employed a long time. As a self-employed mortgage advisor, I always say to people, if you don't get what you want, which is the mortgage, I don't get what I want, which is getting paid. So it's in my interest to be very open with my communication and not basically lying or just being very, very truthful and giving it to you straight. And I don't think enough people do that in the industry.
Yeah, as we kind of sum up for the evening, and if anyone's got any last minute questions they want to throw in, please do. But this is the kind of punchline on it, I guess, is the property market is really, really knitted together and functional based on communication. It's all service industries. The survey is a service. The estate agent's offering a service. The solicitor is giving advice through service. The mortgage advisor, the same. It's all communication led. And in this modern day and age, 9 till 5 kind of communication is not really an option for the modern day home mover on home seller. So you do need to find those methods that work. And that's why having a really strong team around you, a trusted agent that's recommended, a trusted solicitor that's recommended, same for surveyors, same for mortgage advisors. If there's any advice that we would all give, is get that recommended, trusted person and pay the extra if it costs extra, because there's the old phrase of, you buy cheap, you buy twice. In the property world, you buy cheap, you lose tens of thousands of pounds. And that's often the way it is. So it's really important that people look at the net figure, not the headline price of an estate agent's fee, a mortgage advisor's advice fee, what the survey is. You look at the quality and then you pay for quality when it comes to property, because we're talking about hundreds of thousands of pounds at the end of the day. Also want to just touch on confidence as well, because we've mentioned a couple of things. Clint was talking about, the survey where we've managed to find £9,000 more because they had the survey. These types of things are built on confidence. And what was quite an interesting statistic that came out about the base rate changes last year, actually, and Tom will vouch for this, the base rates dropped last year twice. There wasn't really a drastic change in mortgage rates when that happened. In fact, on one of them, mortgage rates went up. But the statistics are now out, and they show that on the first one, which I think was around August time, buyer registration instantly went up 10% that month. And on the second one, where mortgage rates went up at the end of the year, buyer registration increased by 17%. And that shows that confidence in the market plays a really big impact. So I think it's just important that you speak to the relevant people. Like Luke mentioned, being on this webinar gives you a really kind of good head start on the competition and the rest of the market out there. And that's the real key message. Communication is vital, and the knowledge and confidence that's going on in the market is vital. Megan's jumped in with a question right at the end here, just as I was wrapping up with the full stop. What we got? Looking to sell in the next 6 months, what would be the key things to focus to put us in the best selling position? We've got a 1-bed flat to sell. It's a great question, and I love the honesty within it. And I think where we sit at the moment, we look at a 1-bed flat, and we can categorize that into 2, maybe 3 different profiles of buyer: first time buyer and investor. And if it's a ground floor flat, you could also look at a downsizer as well. And I think they're the profiles that we'd have to look at based on size of property, layout, separate kitchen versus open plan kitchen, size of bedrooms would depend on whether it's going to appeal to a buy-to-let investor or not, because that's going to have an impact on their rental. I think when you're looking at a one-bed flat and when you're looking at a first-time buyer type property, the advice that I always give anyone that's looking to sell, that kind of first-time seller advice, is for this time in this transaction, most likely you're upsizing. Having an estate agent in your corner and a mortgage advisor that can give you advice along the way is going to be important, because you've got two plates to spin now rather than just focusing on buying. So it can be a little bit extra stressful. I definitely would say with an apartment, and Clint will back me up on this, sell first, then find. Don't go out and fall in love with somewhere and then think you're going to sell next weekend. You may not. Sell first, then find. I think that's really important. That old chicken or egg scenario, sell first, then find. And I also think fall back in love with the property. That's what I would always say. Spend a weekend decluttering, silicone change if needed, a little bit of grouting, get all the whites white again, get the space again. Look at your home after you've spent a weekend on it and think, oh, I love this place, and then it's ready to go to the market. So that would probably be the advice that I would give Megan.
Can I just I'll be really quick. Megan, try and get hold of your management pack from your management company now. Like, if there was one thing that's going to hold up a transaction on leasehold, i.e. flats, apartments, is your management pack. If you can't get hold of it, find out where you can get hold of it. So as soon as you've got that estate agent on board, or as soon as you get an offer, you can grab that management pack straight away. Everything revolves around that management pack in the transaction.
Yeah. Great advice. And of course, in terms of more detail, because every property is unique, person's circumstances are unique as well. So I think if you are in a position where you're like, you know what, I could just do with having a WhatsApp chat with someone or getting a realistic price, then I've just put a link on here for you, and you can kind of go straight into the Avocado Property agents.co.uk/value my property. If you go to the selling tab, you can book a valuation in with us. And then even if you just want to have a WhatsApp chat, first of all, we can do that. Or we can come out and visit you and give you some advice and tips before you go decorating or painting or doing anything crazy like that. But yeah, for anyone that wants a survey or got questions about surveys, please do speak to Luke. If anyone's in need of mortgage advice, remortgage, new mortgage, buy-to-let mortgage, have a chat with Tom at Mortgage Tribe. And if you want to speak to any of us about property here at Avocado, myself, Clint, jump on the website, drop into one of the contact boxes, and we'll be happy to help as well. And thanks to everyone that's joined us throughout the show tonight. Everyone's pretty much stayed with us throughout the whole time. We've had some great questions. So thanks again to everyone. And we will be back in a few months' time with another one.
See you later.